So, very good morning, everyone. I'm Kaushik Shaha, and I'm going to present my topic on challenges in microfinance-led rural development. So, as you all know, microfinance has emerged as a powerful tool for rural development in India. It provides small loans, savings facilities, and other financial services to low-income households who are basically excluded from traditional banking and systems. So now coming up to the introduction part. So earlier, as we all know, rural people, they depended mainly on money lenders who charged very high interest rates. But as you all know today, through self-help groups, which we basically say SHG, these are bank linkage programs between microfinance institutions. Basically, we call them MFIs, and the rural credit has shifted from informal sources to formal institutions. So, uh, microfinance is contributed in many things. For example, self-employment, women empowerment, livelihood generation, and also the financial inclusion. So, let's discuss about few factors like how the self-help groups, bank linkage model works, the role of microfinance institutions of India, their challenges, and also let's talk about the path forward, how everything is gonna be. So basically, this SSG and microfinance linkage was is the I feel the backbone of Indian microfinance. So as we can see in this model, especially the first one, 10 to 10 rural women from they basically form a self-help group in their village, as we all know. And then second, they do the regular savings. They have small amounts of savings or earnings uh, like regularly. And coming up third, based on their savings discipline, the banks provide loans to these groups, and also coming to the responsibility, the group members are they are jointly responsible for their loan repayment. So what basically the system builds, I feel financial discipline first, second mutual trust, and also collective responsibility. So also along with all this, the MFIs they operate with proper speed and scale, and also with this they reach remote villages and provide quick loan disbursement using all this group lending models. So the problem arises when this system is not properly managed. This is the main problem. And also the basically success formula is the credit plus skills as support plus financial education. This is equal to sustainable rural development. Coming up next, the over-indebtedness. So when over-indebtedness happens, so when borrowers take more loans when they cannot repay, like then they cannot repay from that. And this situation arises because multiple microfinance institutions, they operate in the same area, and in India basically there is more. Then also borrower takes loans from different institutions too, and there is also a pressure of weekly repayment. Also, sometimes people take like several loans or new loans to repay their old loans, uh, like which is a very hilarious factor, and they fall under the debt cycle, and the specifically this leads to financial stress, mental pressure, family conflicts, and also default risk gets really high, and also damages their credit history. And now talking about if their income is unstable, and repayment becomes very difficult for them. So for me, like the solution should be uh, this MFIs. They must practice like responsible lending by studying their risk appetite and what actually that person can repay, what business they have, and also to check their existing loan obligations, their capacity, which I have discussed, and also their income stability, whatever income they have. So coming up next, yeah. So loan diversion. So what this is the second challenge, I will say. So it basically there this basically means using the loan money for purposes other than original income uh, generating activity. So basically, when this happens, when their business does not grow, and also no income is generated, and the repayment becomes very difficult for them, as this self-help groups we have, and also this low income individuals has not a stable business. So why basically this happens? Due to emergency needs, social pressure, medical expenses, and also they lack financial planning. And also, I'll say that credit alone is not enough. Loans must be with proper guidance, monitoring, and also proper financial education should be there for them. And coming up next, the third challenge we can see is low financial literacy. This is I feel the main factor. Many rural borrowers, they do not understand interest rates and also EMIs, and they also cannot differentiate between normal flat and reducing interest, basically fixed, floating interest, etc. They do not understand loan terms and also the conditions, and because of this, they may uh, as we see, they sign documents without even reading. They even borrow more than they need, and also there is no plan uh, like to repay their money. So this increase their debt day by day, or year by year. So I think banks and MFIs should conduct financial awareness programs, also the training sessions, and skill development workshops too. And now, so I think this financial literacy basically gives the understanding of saving, budgeting, and their risk management. Coming up to the next challenge is climatic risks. This climatic risk also play a major factor in rural areas, and because basically people are farmers, and so they their agriculture depends on rainfall, weather conditions. If there is drought, flood, or crop failure, this income stops completely, and loan repayment does not stop. It's a loop, it's a cycle, and this creates repayment crisis, the financial instability, and I think to promote I mean, sorry, to reduce the climatic risks which basically arises for them, we should promote crop insurance and offer flexible repayment system during disaster time by giving them much more time, and encourage diversified income sources, and also to some other business like poultry, meat, etc., which they can sell. So these are basically these are the challenges which majorly in microfinance led current India is facing. So what's the path forward? So I think to overcome these challenges, we really need a multi-dimensional approach. As in India, it's really difficult to implement all this. Still, still I would like to list some of those. So first is a strong regulatory framework to monitor microfinance institutions, and second will be transparent practices, such as clear interest rates should be conveyed to the ones who are taking loans, and credit bureau checks, and third, I would like to say customer protection norms to ensure ethical recovery practices, because as you know, this small NBFCs or MFIs, they recover money with not a good way, not in a good way, like coercion, etc. So also financial education is also mandatory, and also fifth, I'd like to say proper risk mitigation through insurance and flexible repayment systems should be there. So this microfinance must conduct credit capacity building, financial literacy, risk management, and also responsible regulation. So in conclusion, I'd like to say microfinance has transformed rural India by shifting credit from money lenders to institutional sources. This SHG Self-Help Bank linkage model forms the backbone of Indian microfinance, while the MFIs provide speed and scale. So, thank you so much. That's all from me.